Keith, you said before earnings comps will be difficult in 4Q17 and 1Q18. Would you recommend defensive plays in coming months?
Not really. No, I'll let you know when I think that. And I get it. Whenever I give you something that's bearish, everybody gravitates toward it. Again, there's also this thing called the market signal. So again, that's what's, if the market was signaling buy consumer staples, buy utilities, I would have bought them. I'm not buying those defensive allocations. I'm not buying long-term bonds. I'm not buying gold. So again, when I think that the timing is right, you're going to see me execute on that. If anything, last week was another great week, if only on that basis. I mean, again, gold was down last week. Utilities, you know what they were up on the week? 0.1%. That's horrible. I mean, that's just, being defensively positioned was horrible last week. I hope you ate a lot of food, you enjoyed your Thanksgiving, and you were aggressively positioned. If you actually look at the, I don't know if Genron has this handy, but the style factors last week, the things that really worked were growth. I mean, so you could see high beta. Nice job, Genron. 1.3. So if you go to high beta, it was up 1.3% last week. That's 120 basis points better than being long utilities, for example. Or if you go down to the top 25% sales growers or earnings growers, the last two style factors, up 1.2%, 90 basis points respectively. Look at what those are up this year, like 22.9% all the way over to the right, fourth from the bottom. Second from the bottom up, 18.9%. These are masterful returns, okay? These are being aggressive is what you should be doing, not being defensive. And I understand that everybody and their brother, sister, and their sister's brother, and their dog and brother's sister, they all want to know, where's the top? Where do I get defensive? Keith said that earnings are going to be a tough comparison. Yeah, Keith said that because earnings have been so goddamn good that that's the point. It was the best earnings quarter for tech going all the way back. I mean, last week's durable goods number on Friday, I wasn't on the switch on Friday, but it was up 6.5%. That's a new high. That's a 37-month high. You have a calculator at home? Divide 37 by 12. That was more than a couple years ago. The CapEx was up 8%. I mean, these numbers are fantastic, and I understand, and I'm going to empathize with you. I do empathize with people that are subscribers, obviously, because I want you to like me, and I want to have a good relationship. But you still have to empathize with why the bulls have been making so much money this year, because they've been purely data dependent. Okay, they haven't chosen like a line in the sand and said, okay, look, this is the magic multiple that the stock market should stop going up, or this is what Keith said that next year there's going to be some tough comps, so I should just stop and get defensive. No. That's not how you use this. And again, I welcome you as a subscriber. I want you to empathize with me, and I'll empathize with you. Again, I know it's hard for people to be making money this year, having seen what we've seen, but it gets harder if you still don't stay with the process. You got to stay with the process. Expensive gets more expensive, cheaper gets cheaper. Boring, low beta, underperformed last week. High beta, strong growth, outperformed last week. It all makes sense to me.